From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for August 9th, 2016. In just a moment, we're going to be taking a look at the NZDUSD, the New Zealand dollar versus the US dollar, for today's trade analysis. But first, a recap of a couple of the trade suggestions made over the past couple of days. We're going to start here on the AUD-USD, Australian dollar, versus the US dollar. If I zoom out here to the daily chart real quick first, we could see this black box at the top right-hand corner of the chart. And take note of the resistance into the green shaded area, 76.50 up to 76.85. We've seen resistance here, and over the past few days continued to find resistance into the green shaded area. So yesterday we were looking for selling opportunities into that resistance zone. Let's take it back down to the 4-hour time frame, and again we took a sell into the resistance zone yesterday right around the 76.55 level. You can see that right here, and it went down and we saw about 30 to 35 pips of profit on the trade. We used the trade manager to manage the stop loss on the live trade, and of course it took the stop loss to break even, and the market went back up, took us out at the break even on the remaining portion of the trade. So 30-35 pips of profit seen on the trade, came back up, taking us out of the trade. The question is, do we want to get back into it? I think as long as it stays, again, going back to the daily time frame, within and under there, under that green shaded area, if you see any evidence of sellers coming back in other words, going back down here to the 4-hour time frame and see evidence of sellers fighting back again, I think we could look for another opportunity to go short, targeting the pink shaded area. The only real problem with this is if it breaks above that green zone, 76.85 or so, we're likely looking for the continuation of the uptrend for the Australian dollar. Another trade suggestion made yesterday was a potential buy on the USD CAD, US dollar, versus the Canadian dollar, and it was a very short-lived bump higher, and then it's dipped back down, and then it's went back up. Let's take it down to the 4-hour time frame. This really explains what's been happening over the past several hours. Look at this. Went up, went back down, went up, went back down. So we have been looking for an opportunity. Actually, yesterday I put a buy order down here at the yellow shaded area, 31.30. Never went down that far to take us in. Still waiting to see if the market will make it on back down there. Probably needs a little bit of a rally on oil to go up a little bit further for this US CAD to go down. If that happens, then we have the opportunity to go long. If oil suddenly just turns around and goes back down, I think we're going to break this little orange shaded area here on the US CAD, which is 1.3185, and we look for it to continue higher. So watching oil prices to see what's going to happen here. I'm still focused on buying dips to the yellow zone or a break above the orange shaded area. Let's take it over here to the NZDUSD. The blue box here is really what we want to concentrate on. We're at the top of the rising trend here, but we've been within this blue box in the range for several weeks now. We have to note, of course, we have significant news tomorrow, Wednesday. We have interest rate news out of New Zealand, so we'll want to keep note of that. The potential is that they cut interest rates. Cutting interest rate in New Zealand causes this currency pair, New Zealand dollar, to go down. So we want to keep that in mind with our trade opportunities before we get into tomorrow, Wednesday, and that interest rate news out of New Zealand. Let's zoom it in a couple of times here on the daily time frame so we can really get a handle on what's happening here. We were stuck inside this black box last week, bouncing around inside there. Late last week, we broke underneath that black box in the blue shaded area, 71.55 to 75. Pushed all the way down here into 7100, rallied yesterday, and even today coming back into 71.55 and the bottom of that blue shaded area. Let's go back to the 4-hour time frame and take a look at what's been happening over here between the blue and the yellow zone. So yesterday, the suggestion yesterday from the trade room was selling into the 71.50, 55 level, the blue shaded area. We had Fibonacci. We took Fib from the high to the low, even this mid-high down to the low. Found some overlaps of Fibs right around the 71.50 level. So if you took a sell, like I did, into the blue shaded area yesterday, we were able to see a pretty decent amount of profit. The market fell back down, saw almost 40 pips of profit here, 3 pips of profit on the trade. Again, trade manager did its job. We got in at 71.55. The trade was closed at 71.50, so the trade manager had locked in 5+ pips of profit, seeing over 40 pips on the trade back down to the yellow zone. I think today is the same thing, status quo. We continue to look for opportunities on rallies into 71.50, 55 for selling. We've already seen it one time today. We target back down to the yellow shaded area, and of course, if it can ever break underneath the yellow zone, we look for it to go further. That's the direction I would focus on, given the the fact that there's a potential of cuts of interest rates out of New Zealand tomorrow. Now, if the market surprises us and they don't cut interest rates, of course, we'll probably look for the break of the blue zone and the continuation back up to the green shaded area up here as our next resistance, or higher, likely if they don't cut interest rates. So we're watching for the cut of interest rates in New Zealand. We're looking for the continuation of this downward fall here because of that. We had positive news out of the U.S. on NFP on Friday as well. So all of that points to selling on rallies to resistance. So I'm looking at 71.50, 71.55, as close as you can get to that blue zone. Stop loss, of course, is above the blue zone. This red line represents a potential stop loss area up there close to 71.95 or so, 7200. You just really don't want it to break above this blue zone. So selling, targeting the yellow zone or lower, even back down towards the purple zone for the New Zealand dollar over the next couple of days.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.